So I'm here today with James to talk about the analytics engine that powers Affirmative Technologies. All right, James, so why don't you tell us what kind of analytics does Affirmative Technologies offer?
So we are powered by, at its heart, a predictive tool that it predicts the likelihood that our clients' originators, in other words, the businesses that they process payments for, will submit unauthorized returns into the network in the next 30 days. And we've built that based on our data experience with over 1 million originators. We process around $1.5 trillion in payments every year. So we've applied our machine learning capabilities to that to build an engine that updates itself on a regular basis and enables our clients to predict risk of their originator clients.
Can you tell us a little bit about the transaction risk scoring?
Yes, absolutely. So take what we've done at the originator level at predicting the risk originators will submit unauthorized transactions into the system and apply that to the transaction level. So we score every outgoing transaction based on the likelihood that transaction that financial institution submits into the network is going to be returned. It can be returned because it's unauthorized. It can be returned because of NSF or any other host of causes, but we're able to predict that in a very accurate way at the transaction level. And that enables our clients to fine-tune their strategies, not just at the originator level, but also at the transaction level for managing risk.
Can you tell us a little bit, what is pattern analysis and how can banks use that to help manage fraud risk?
Pattern analysis is looking at a history of transaction activity. Let's say how many deposits you get in your bank account every month. You would get maybe a payroll every 2 weeks, so you would expect to see 2 deposits on a regular basis. And 1 month, if you get 6 deposits, that would be an unusual pattern. And so our software flags those unusual patterns for our clients to be able to go in and do that research, because that is potentially suggestive of fraud. So we've got a whole host of patterns that we search for at Affirmative.
So beyond historical reporting, what types of tools are banks looking for in order to manage their payments risk?
So specific to our customers, there's a couple of one sort of fundamental concept is managing your exposure to your originator, both in terms of how you allow them to originate credit transactions and originate debit transactions. The key to managing that originator risk is tracking how they utilize those exposure limits that you set for them, understanding the likelihood, what types of activity they undertake at your financial institution, in other words, what types of transactions they submit, the risk of those transactions. So we provide our clients with tools to manage that complete dynamic of risk.